We stay in Latin America, and the International Monetary Fund says the region's economic outlook has turned brighter this year. In its latest report, the IMF expects 3.4% GDP growth this year and 4% in 2014. That is up from 3% growth that we saw last year. Now, the agency cites a number of factors for the improved outlook, including stronger overseas demand, more favorable investment conditions at home, and the effects of monetary easing. But there are risks ahead. Among them, the recent decline in commodity prices. IMF's Cebeddu, who helped author the report, explained to me why that is such a big danger.
The reason why it's so important for the region is because the region's exports are really commodity-based. Okay, so the region exports a lot of oil, it exports metals, it exports agricultural goods that are consumed by countries in Asia, particularly China. So if China is slow and commodity prices come down, the region is going to be affected by this. For that reason, we like to highlight this as being an important risk, but much more of a risk over the medium term rather than a near-term risk. For this reason, the region needs to be prepared for that eventuality.
Currency stability, capital inflows, these are two things that often come up as topics when you speak about the economies there.
That is correct. I think there is a lot of discussion in the region about the impact of capital inflows on currencies, on competitiveness, and their ability to grow down the road. And a lot of this has been attributed to the fact that you have easy monetary policies in advanced economies that are also pushing capital flows to emerging economies, particularly the region. Now, we're getting capital flows to the region not only because you have easy conditions in advanced economies like the US, but also because the fundamentals of the region and the growth prospects of the region are positive. So that tends to attract flows. Now, that presents opportunities that the region needs to take advantage of, but also challenges. And so the challenges here is like, how do I prevent my currencies from over-appreciating? How do I prevent from losing competitiveness?
I mean, this comes down to really answering the bigger question of sustainability in a large sense, does it not?
I think it comes down to the issue of how do I take advantage of these capital flows? They need not be necessarily a bad thing, but you need to know how to manage them, okay? If the flows are volatile and they're large, that poses challenges because they could revert. So I think that in the report, what we highlight is that there are tools that the region has at its disposal to take advantage of these flows, but also manage them well. For example, on the fiscal front, there could be a little bit more of prudence in the conduct of fiscal policy because that's going to, stem domestic demand. At the same time, there's exchange rate flexibility. They could allow the exchange rates to appreciate some to avoid speculative flows or one-sided bets. And in addition, to avoid a credit boom associated from these inflows, there are what's called macroprudential policies to prevent that from happening. So again, we need to think of this as an opportunity, but we also need to know and be very conscious that managing this is a challenge, but that there are tools in the disposal out there for the authorities to use in the region.
Many economists that we have come on the show talking about Latin America specifically always cite the issue of reforms, structural reforms, whether it's, a specific administration or it's the region as a whole. It's a common theme that comes up. How much of an impact do these potential reforms account for in the report?
Correct. Well, it's always very difficult to quantify the impact of structural reforms on growth. Okay? What we do think and what we mention in the report is the following, is that going forward, the region will need to rely much more on productivity growth to sustain its current growth levels. In the past, factor accumulation, for example, the decline of unemployment is helping a lot in terms of producing growth. Increased investment, that was helping a lot in terms of pushing growth. But going forward, it has to be productivity. And you're only going to get increases in productivity if you have structural reforms in place that allow that to happen. Now, those structural reforms and what they should be are very country-specific and should be tailored to country-specific circumstances. But there are some very general areas where the region can work. They can improve its infrastructure, they can improve their human capital. That should help to bring in private capital and private investment. At the same time, it needs to work on improving its legal framework, its business climate. And these are things that should, in some ways, help improve productivity. So this is the realm of structural reforms, difficult to quantify their impact, but certainly necessary to boost productivity down the road.